Welcome to the World Oil Deep Dive Podcast. Our guest today is Girish Saligram. He is CEO and President of Weatherford. And my name is Kurt Abraham. I'm Editor-in-Chief of World Oil. Girish, welcome to the podcast.
Thanks so much for having me. It's such a pleasure to be here.
So let's get right into it. You got quite a story to tell of late. Weatherford has successfully navigated a turnaround from bankruptcy. It's now a sector leader across a wide range of performance metrics. Most recently, in your second quarter earnings, you announced the company's first ever dividend and share buyback program, and those are significant milestones for the company. So how did you orchestrate this remarkable turnaround, and what should we look forward to from Weatherford financially in the near future?
Hey, thanks for the question, Kurt. Look, the team's done an absolutely incredible job, and I get to have the pleasure and the privilege of being the guy who gets to talk about it a lot more than everyone else. So over the past 4 years, really what we've done is take a mentality and a philosophy of getting down to the basics. So we've focused on operational execution with a very simplistic but very, very important North Star, which is generating free cash flow and increasing that cash flow in the company while expanding margins. And really, the way we have done that is first and foremost by making sure we have the right operating leadership in the company. I am incredibly proud of the leadership team that we've got in place. We've got people who are very hands-on, who understand the business, who are domain experts, but also bring a completely different way of thinking. So that's number one. The second is making sure that we have the right culture across the length and breadth of the company that drives alignment, ensures accountability, fosters transparency, and has a culture of collaboration throughout. The third thing for us has been around making sure that we are all aligned around the same metrics. So I talked about cash flow being the most important thing, but making sure that people understand what that means to them. It's very different if you're in a repair and maintenance shop versus if you're in an engineering lab or if you're in a functional role. So what does that translate to for people? And then last but not least, having the right operating cadence across the company, something that we've been very focused on for the past 4 years. So all of that has allowed us to improve the operating performance. And as we have improved the operating performance, we've been able to attack the capital structure of the company, get the company relisted, take off over $1 billion of debt, reduce interest costs by about $100 million, all of which has enabled continuous improvement and has gotten to this point and position where we were able to announce a shareholder return program with a dividend and a $500 million stock buyback the last quarter.
Excellent. Well, on February 1st of this year, your firm completed the acquisition of two technology companies in the wireline sector from Turnbridge Capital. Those are Probe and Impact Selector International, and both are widely recognized brands. You also completed the acquisition of Ardyne, a leader in well decommissioning technology, with whom you've had a partnership since, I guess, the fourth quarter of 2022. So how well do these companies fit with your existing portfolio, and what are your plans for them in the future?
Terrific. Very, very excited about all of these acquisitions, Kurt. So one of the things that we've done over the past few years is take a very hard look at our strategy in every single product line. And we've tried to make sure that our product line strategies are reflective of what we are capable of doing, where we have differentiation. And each of them has a little bit of a pivot to drive a lower capital intensity and a higher return, more importantly. So in wireline, one of the things that we've pivoted to is this notion of capital sales, as well as ensuring that our footprint is not ubiquitous. So we are concentrating our service footprint in a few countries, but making sure that we are a technology provider at the same time in multiple others. So as we looked at our portfolio, we had a couple of gaps in there. And what Probe and ISI did is really a couple of things. One is they've complemented our portfolio so that now we can offer the complete suite of open hole and case hole technologies to other service providers in regions where we don't play. Second, they bring, as you pointed out, terrific brand recognition and some great innovation and products into the company. So really enabling our product line strategy to take it to the next level. In the case of Ardyne, one of the most important things in our intervention businesses was to focus on where we think there is a lot more growth. That is in the market of slot recovery and plug and abandonment. Ardyne brings with it some proprietary technology that is very efficient and allows us to again take these operations to a higher level of efficiency. And one of the things that we looked at as we looked at the Ardyne acquisition was de-risking it. We said, look, how do we make sure that what works really well in the North Sea works everywhere else in the world as well? So the reason we formed the partnership with Ardyne was specifically that, to de-risk it, and that's what we've been doing over the past couple of years. The results have been fantastic, and so we decided to take that partnership and take it to its natural end and acquired the company. So very excited, very pleased with the integration that the team has done so far on all three of these companies.
That's very impressive. This year, we World Oil have run articles from Weatherford on managed pressure drilling advances, the use of permanent magnet motors and progressing cavity pumping systems, and the latest advancements in use of annular safety valves offshore. So how are these product lines faring, and is there anything recently new to report?
Yeah, look, first of all, thank you for continuing to be supportive of our technologies and running these stories. Look, we are very excited about a lot of different technologies, and you've highlighted a few of them. In managed pressure drilling, this has been a really key technology for the company. It's really our flagship product line, if you will. And we've taken this notion of managed pressure drilling and extended it to what we call managed pressure wells. So we're able to do a lot more than just drilling efficiency. One of the most important things that we can do is managed pressure liner hanger, managed pressure cementing, managed pressure gravel packs, and a lot of other applications that we are excited about. You mentioned permanent magnet motors. These replace our conventional induction motors, and they have a much better energy consumption profile, but also have a better noise profile, and that's something that customers are looking forward to, are excited about, and we're seeing great traction in that space. In the annular safety valve, you mentioned, we've got a rich history and a legacy of having a leading technology, something that customers look at as an industry-leading safety valve. What we've been able to do is couple that with our RFID technology, and again, take that technology that we've got, the portfolio that we have, bring different pieces together, create a higher degree of differentiation, but more importantly, create a lot more value for customers. So all of these are getting a lot more traction in the market. We're excited about where they're going, this plus several other things.
Excellent. What other product lines, equipment, and devices do you think you're having good success with? And is there anything new under development in these lines?
Yeah, look, we are very excited about all of them. It's kind of like asking to pick between your children when you say that. So we've got very focused investments in all of our different product lines. We look at it on a returns basis, what can really solve customer problems, but also generate the right returns for the company. I'll give you a couple of examples. We've talked about MPD and wireline in the past, but we continue to be very excited about our high temperature offering in our drilling services business. In the world of TRS, we've made some great advancements in automation and driving connection integrity. We've now got a system that gives a much higher degree of assurance that we will never have a drop string incident, leading to much better service quality. And this assurance model is something that we are excited about and rolling out. In the world of completions, I talked about RFID earlier, but in addition, we're also very excited about the fiber optic technology that we are deploying. In the world of intervention services, we talked about slot recovery and plug and abandonment, but also in slot recovery, look, a lot of work around sidetrack technology. We've got a new whipstock, the Alpha V, that is gaining some good traction. So a lot of different things. We're putting a lot of effort, a lot of focus on our research and engineering teams, and making sure that we are solving problems for customers that are tough for them, but at the same time have a high return potential for us.
Understood. If you could invest in just one or two new products or lines of business, let's say, what would they be?
Yeah, look, it's a really tough thing. Like I said, Kurt, we look at it across the board, and we think there's several advancements and several opportunities across all of them. Having said that, though, I think look, the one thing that unifies everything, and that is getting a lot of attention, is our digital business. So that's something. If there's one thing to highlight, it's how we are driving digital enablement across all of our product lines. How we are making sure that we are bringing the data streams together, and that's a big focus for us. We've always been a leader in production optimization. We're the only company that has in the OFS space its own SCADA system. We've been able to couple that with our edge controllers as well as our state-of-the-art production optimization platform. But we've been able to extend that throughout the well life cycle. So starting with drilling, where we've got very highly sophisticated electronic systems in our rotary steerables, but also real-time visualization, our drilling platforms. We've got artificial intelligence that's embedded in our well construction products, especially in TRS. So really that digital thread, making it more ubiquitous, not just from a perspective of delivering value to customers, but also in terms of how we deliver our services and how we run the company.
Understood. Would it be fair to say then that your commitment to R&D at Weatherford remains strong and unwavering?
Without a question, unequivocally. Look, it is our number one area of investment. We have invested more into RD&E over the past 4 years than we have into any other function, and this will continue to be something that gets a preponderance of attention as long as we can continue to deliver the returns, which I'm very confident we will.
Obviously, one of the things that's motivating the industry these days is artificial intelligence and machine learning. And accordingly, what role do you see those two items playing within your company, and what role do you see for it in the industry as a whole?
Yeah, look, obviously a lot of discussion and a lot of excitement in multiple industries on this topic. We think it's something that's really important, and it's something that it's not new for us. We've already been doing it for a while. I touched upon our TRS business earlier in this podcast. We have had artificial intelligence running in our TRS business for a while. We're driving this automated connection integrity. So, we're not new to this, but we think there is a huge inflection that is coming, and we see it playing a big role, unifying again this digital data stream that runs across our product lines. There's a lot of potential to drive better outcomes, to have more predictive analytics, and therefore improve efficiency and cost for our customers. At the same time, we also think there is a massive opportunity internally in terms of how we actually operate the business. So a leaner business, but more importantly, a business that is far more predictable in terms of its outcomes.
All righty. We're going to change the line of questioning here just a little bit and talk more about the overall industry and where Weatherford fits into it at this point. And basically, how do you see the equipment service sector of the upstream faring right now?
Yeah, we are already at a point in this upcycle where this cycle has been longer than pretty much anything in the past 15 plus years. So at the same time, though, we believe we've still got legs to the cycle, both on the international as well as on the offshore side. So we think the whole situation the world is dealing with, number one, we've still got decline rates in reservoirs. That's just physics and nature, and you can't do anything about it. So everyone has got to offset that decline in reservoirs. Number two, we've got this whole notion of energy security that really has taken on a heightened importance over the past couple of years. The third thing is, energy demand is not going down. It may not be growing as much at every point in time. It may not be growing as much as people want, but it's still growing. And while there are several different alternatives being pursued, the net energy demand for the world is growing, and we think oil and gas will continue to play a very significant part in that. So we think over the next few years, it is still a positive and a very robust outlook for the industry, again, driven by the international cycle and the offshore cycle. So we think there's more headway to play. In terms of Weatherford, we continue to be a company that is driving innovation and solving customer problems through the deployment of technology. We're not really looking to be the company that is everything to everyone everywhere, but we want to be a company that is focused. And where we really see that focus playing out is in late life well management. So a much more production and development oriented company, but focused on late life well management.
I tend to agree with you on all counts there. I think that's a pretty good summation. We kind of answered two questions in one there, so we'll go down to this next one and speak specifically to the subject of the U.S. It seems to be a bit stagnant at the moment for E&P. Do you see this improving next year? And what are some other geographical areas you see the industry doing well and maybe opportunities for Weatherford?
Sure. Yeah, look, the U.S., the lower 48 especially, really has been a interesting story over the past couple of years, driven primarily by a combination of E&P consolidation, as well as improvements in drilling efficiencies, coupled with a very high degree of discipline on the part of our customers. And I think overall, that's actually a net positive for the global industry as a whole. So, we think it will continue to be flattish for a while and probably start to pick up towards the second half of 2025. We think there's still, we've constantly been surprised by the drilling efficiencies our customers and the industry has delivered. So we think that will continue, but it is getting to a point where it's not probably going to be enough to offset the declines that we will see. Well inventory is going to be a little bit more of a challenge. It's just sort of the nature of the beast, if you will. So the best wells are being drilled. So as that continues, we'll probably see a little bit more of a decline. But we don't expect it to be a massive inflection and a sudden rise back to 1,000 rigs or anything like that. I don't think we will see that again. I think this capital discipline that our customers are exhibiting is something that is here to stay. We think it's a positive for the industry. There's also discipline in the service sector of maintaining pricing, not going crazy with capacity. So we think all of that actually leads to a world where production continues to increase, albeit at a lower rate, and we continue to generate returns for investors.
Well, that kind of leads into this thought, and that is when we talk about capital discipline and what the companies are doing, we've seen an awful lot of mergers among the operators in the last couple of years. Do you think this trend could transfer over to the equipment and service companies more than it has so far?
Yeah, look, it's one of these things. Every time there is a new announcement, you sort of wonder, is this a wave that becomes a tsunami, or is this a wave that dies out as a ripple? So we have to wait and see a little bit. But I've said this before, and I will reiterate it. I still believe that there is still surplus capacity in the equipment and services sector, and there is an opportunity for consolidation. I think the consolidation has to make strategic sense. At Weatherford, we've got a very simple but very rigorous lens that we look at every potential opportunity through. And I think the industry will benefit from that consolidation as our customer base in the US starts to shift and shrink. There is, again, a natural impetus for that. Having said that, back to your previous question, we still think there is plenty of opportunity, plenty of growth on the international side of the business. But again, scale can certainly help as long as it's strategic in nature.
Makes sense to me. We've pretty much run through most of the subjects here. Is there anything in particular that you'd like to add that we haven't discussed already?
No, look, I think you've covered a wide gamut of topics. Again, appreciate the opportunity to be here. Weatherford is a remarkable story, like you pointed out right at the beginning. But I'm incredibly excited about what is yet to come. Over the past 4 years, this team has driven a remarkable turnaround. But we've done it with a lot of constraints and dealing with a lot of the challenges that came from the prior 10 years of having to deal with some existential issues. Now that we have gotten to this point that we are at, where we've got, a very high degree of EBITDA margins amongst the top tier in the industry, we've got top tier leverage on a net basis. We've got top tier return on invested capital. We've got a lot more flexibility. We've got more degrees of freedom. As I think about those degrees of freedom, coupled with the same focus, the same rigor around our operating paradigm and operating intensity, I'm incredibly excited about the next few years and the opportunities that unfold. So, in my mind, the best is yet to come.
Excellent. Well, Girish, we really appreciate you speaking with us today. Folks, that's the end of the podcast. You've been listening to Weatherford President and CEO Girish Saligram, and my name again is Kurt Abraham, Editor-in-Chief of World Oil, and you have been listening to the World Oil Deep Dive Podcast.